202. The ask is, uh, let's read the facts first. The directors of the Hemlock Company are preparing the financial statements for the year ended 30th September 13. Most of the competitors value their inventory using the average cost method. The value of however, this company uses FIFO. At FIFO, their inventory is valued as 40 million. If they value it at average cost method, it will be 36 million. So, by adopting this average cost method, the company can improve its profit for the year ended 30th September 13 by 4 million, which is true. If their ending inventory will be 4 million lesser, their cost of sales will also be lesser, and hence their profit will increase. How their cost of sales will so if we talk about cost of sales, in order to calculate cost of sales, beginning inventory is a positive adjustment. You add it, then you added your purchases, you add your purchases, and then you deduct this closing inventory or ending inventory. Ending inventory is a negative adjustment. So if ending inventory is recorded at less, this thing you will you will deduct a lesser amount, no? So then your cost of sales will be lesser, and hence your profit will be higher. So there is an inverse relationship between ending inventory, you know. So if your ending inventory is so net if, I mean, it will increase your profit. I don't want to confuse anyone. So if in this case, if they record it as average cost method, their profit will be more. That's what the question is also saying. Even if you don't understand it, it's okay for now. Um, so this company's inventory at 30th September 12 was reported as 30 million. Okay, so there is, we also need to look at the beginning inventory for that matter. So what they are saying is, at in the beginning they reported their, at 5.4. What we should do? We should keep it. Okay, no worries. So at 5.4, they had recorded it at 40 million. 30th was equal 30 million. Okay. So they recorded it as 30 million. So beginning inventory is 30 million. Had they, valued it at average cost, it would have been 26.8 million. Okay. So how much is the change? Okay. So ending inventory from 40 million to 36 million, or maybe, yeah. So it will decrease, no, our ending inventory. If we keep it at 36 million and we have recorded 40 million, so it will decrease by how much? 4 million. Ending inventory will decrease by 4 million, and beginning inventory will also decrease by 3.2 million, because at average cost we are now recording it at 26.8. So this is our um, ending inventory, change in ending inventory, and this is beginning inventory. Okay, so this is fact one. Let's read the second one. Here, if you want to understand what happened with the cost of sales, so this is neutral. Purchases, no changes, you can make it as 0. But beginning inventory is this one. So beginning inventory decreased by 3.2 million. Okay, we'll see what the question asks further, because this facts, it looks like this is related to for few next questions also. So we will see what is the ask of this question, and then we will try to use this formula whenever it is required, or if we need to calculate cost of sales or something, we will see. For now, let's just gather the information from this question and then see what is the ask. In the second pointer here, oh, there are three pointers. So let's look at this ask first. What it's saying. What amount will be receivable of this I mean 155k euro be shown in the financial statement. So this 202 is definitely not related with this inventory piece that we just discussed. Still, we will keep it here. This information may be useful as we move to the next questions. Maybe yes, maybe it is related to 204. Hmm. Uh, Now that we have discussed the fact, let's do this 204. Okay. So what I will do, I will copy this information from here and I will keep it here. Okay. And yeah, so what they are asking, what would be the effect on profits for the year ended 30th September 30 to adopt the SAVCO? So what is the effect of change? So let's see what we are doing with cost of sales. Our cost of sales. So ending inventory we deduct, but now we are deducting less. Like we are deducting just 4 million. I mean, we are deducting a lesser amount, so cost of sales is increasing. Okay, because a negative adjustment was made for how much? 40 million. Now we are saying we will make this negative adjustment of 36 million only for this ending inventory. So there will be an add back of 4 million in the cost of sales, right? Because we are now deducting lesser amount. Likewise, for beginning inventory, we added 30 million. However, we should have added 26.8 million only on the average cost. So this will again be a positive adjustment, right? Because wait a second. We added 30 million. We should have added 26.8 only. So it will be a negative adjustment, right? A negative adjustment of how much? 3.2 million. Even if you go by this signage, what we are doing, we are taking this beginning inventory changes in the same signage as a positive adjustment here. So I mean, because it reduces, we are taking in the same signage. Ending inventory, you can see it is a negative, so we are doing a negative of this changes. Okay. Uh, Hope you understand it. So net cost of sales is increasing by 800,000. So if our cost of sales is increasing, our profit will go down. You know, so it will go down by 800,000. Okay. So the answer should be second one, reduced by 800,000.